Hi everybody, my name is Jacques Fischer, CEO and founder of Wealth Investments, the leading property investment company in South Africa, where we teach and train property investors and entrepreneurs how to build a multi-million rand property portfolio with other people's money, other people's time and other people's knowledge so that they can retire financially free within the next 5 to 10 years from today. Now today I'm very excited because I'm going to teach you how to use the receiver of revenue, SARS, to fund and finance your property portfolio and to help you build a solid and sound buy-to-let property pension for retirement. Have you ever wondered how some investors build property empires and portfolios with literally tens of millions of rands from scratch, from literally nothing, starting with one property in their portfolio? I'm going to reveal my number one tax secret for building a multi-million rand property portfolio and how you can get SARS to pay you hundreds of thousands and in many cases millions back into your property investment portfolio. Even if your current properties are producing a positive cash flow and making profit through the rental income that they receive, I'll show you how you can reduce your tax liability substantially, and in certain situations you can even eliminate tax whilst positive in cash flow, and you can do this completely legally. When I started my property investment journey more than 15 years ago, I was struggling like hell, all alone. I had no team, no knowledge, no strategy and no plan and path to follow. I was totally ignorant and unaware of what type of properties to buy and what I should do and shouldn't do, and truly I had no clue about tax incentives, and I didn't even know that they existed for buy-to-let investors like ourselves. And when I eventually found out how it all worked, I didn't understand how to legally and optimally apply it to my property investment plan and in my portfolio. I paid massive fees to the so-called experts, and everybody had their own opinion and interpretation. It was all very confusing. The first property I bought was my starting point to building substantial wealth. I always knew and heard from experienced property investors that the key to building a property portfolio is just to start. Everybody today that owns a property empire started with one property, and today they're financially free. After years of struggling and making stupid fundamental mistakes, I discovered the one method and way of investing that totally changed my investment career, and now today are changing the lives of thousands of property investors all across South Africa. I finally found out how I could leverage SARS and get them to help me build and finance and fund my buy-to-let property pension. I'm now going to reveal to you a very powerful and explosive tax incentive that very few investors firstly know about, and even the 1% of property investors who do know about this incredible tax incentive knows very little about how it's practically applied, claimed and optimized in a buy-to-let portfolio. If you don't have the right tax experts that's doing this for a living for their clients and doing it on a recurring basis, you may want to think it through very carefully before you start buying properties and claiming from SARS. All I'm saying is get the right people working for you and make sure that they know what they're doing. This phenomenal tax incentive available for buy-to-let property investors like ourselves is called Section 13(6), and it's firmly entrenched in the Income Tax Act. Property investors always ask me at our live property investment seminars and events, Jock, what is Section 13(6)? What do I need to do to qualify for it? So I'm going to give you a brief overview and just some background. For years, accountants had advised their clients to claim depreciation on certain movable assets because they were used in their businesses like computers and copiers. But there was no provision to depreciate investment property. So without getting into too much complex detail on the background, it's important to note that some forms of structures could claim allowances. For instance, hotels could claim 5% depreciation annually under a specific section of the Income Tax Act. But buy-to-let properties fell outside of this depreciation arrangement that hotels enjoyed, even though they were used in the owner's business until 2008 when Section 13(6) came into effect. What Section 13(6) allows is this, that a developer can write off the costs of all new and unused residential units that they erect after 21 October 2008 at a rate of 5% per annum. This tax write-off also applies to the cost of new and unused improvements to existing buildings. It's also important to note that the 5% can be claimed even if the building is acquired on the last day of the tax year. Buy-to-let investors who purchase residential units can also claim an allowance, but it's limited to a total of 55% of the price they paid for the property, the unit. What this means is that if you haven't built the unit from scratch and you're not the developer, but you purchase it from the developer, you will still be entitled to claim the tax allowance. So how do you as a buy-to-let property investor qualify for this allowance? Here are the 4 key requirements to qualify for Section 13(6). Number 1, the unit must be new or unused, including a self-contained apartment, but it must be used for residential purposes, buy-to-let. Number 2, the unit must be used solely for the trade of the taxpayer, in other words, not for the taxpayer's personal use. In other words, you may not live in the property yourself. Number 3, the taxpayer must own at least 5 residential units in South Africa, all of which must be used for the taxpayer's trade. Now the good news here is that you don't have to buy them all at once. You can buy one property in year 1, one in year 2, one in year 3, one in the 4th year, and until such time that you've bought your 5th property, that's when your tax allowance will kick in and effectively have the benefits of Section 13(6). Number 4, the unit being claimed for must be situated in South Africa. Now, there are another 3 very important points that you need to take cognizance of and that you need to remember. The first one is that the amount of the tax deduction is limited to the lesser of the actual cost or the market value of the property. This is just to prevent unscrupulous taxpayers inflating the purchase price in order to claim higher tax deductions. Point number 2 is that no allowance is permitted if the taxpayer has claimed for the same property under another section of the Income Tax Act, meaning no double tax dipping. Number 3, the sale proceeds. Now, when you sell the property, it will be subject to normal income tax to the extent that the allowance were claimed under Section 13(6). This is also referred to as a recoupment tax. Now, there are many ways to overcome this and to avoid recoupment tax completely, and you are more than welcome to discuss this with one of iGrow's legal tax experts, as well as our chartered accountant specialists that specialize in Section 13(6). Now that I said all of this, I'm sure not all of you will know exactly how much money SARS will effectively give back to you every single year over the next 20 years. So let me try and make this as simplistic and easy as possible. Remember that the tax incentive, like I said, is over a 20-year period. So if you buy 5 1 million rand properties, your property value, portfolio value, will be 5 million. SARS will allow a 55% write-off against the acquisition price, the purchase price of the properties, as a deduction against your personal income tax to reduce your personal income tax liability. Here is one of the very important things that your accountant and attorney won't probably talk about or probably won't know. This is that there are certain properties that can qualify up to 100% tax write-off for. Now, this is irrespective of the purchase price of the properties. They will normally tell you that you can only get 100% tax write-off on low-cost housing or on the top structure of plot and plan houses. Now, this is definitely not so, and irrespective of what the Income Tax Act says and the not-so-clued-up experts might believe, there are indeed certain properties that can be claimed at 100% of its value, irrespective of the price paid for it. Now, this is only applicable to certain types of properties. If you work on the minimum tax write-off of 55% of the initial purchase price of the 5 properties, let's say value 5 million, SARS will give back to you close to 57,000 Rand every year for 20 years. This is 1.14 million that SARS will contribute to you towards your buy-to-let pension and towards your retirement. The 1.14 million is approximately 23% of the purchase price paid back to you over a 20-year period. And this is huge money, which can be used in your portfolio to reduce your bond repayment or to finance the shortfalls on more properties that you might want to purchase in your property investment portfolio. There are also 3 very important things that will happen when you effectively use Section 13(6) and apply it correctly in your portfolio. Number 1, your cash flow will improve dramatically. Number 2, your return on investment in your portfolio increases rapidly. And number 3, your shortfalls can be eliminated and drastically reduced. And if you're very smart about it, you can get SARS to fund and finance all of your financial shortfalls from the first year until such time that your properties reach its break-even point. When investing your own capital and making financial commitments, as you use property investments to grow your wealth, it's vital to get the very best tax advice in order to maximize your tax allowances. For advice and guidance, IGRO Chartered Accountants, part of the IGRO group of service providers and specialists, part of your property investment team, are there to guide you step by step through the process of the taxation, claiming the right tax incentives, and how to go about doing it the right way, the legal way, so that you can be optimized and you can have the full benefits of what this section really are giving property investors all across South Africa. So please feel free to contact us at www.igro.co.za, that's our website, or phone us on 021 979 2501. My team of tax specialists and property strategists are looking forward to helping you to create a property portfolio that will serve you and your family at retirement and beyond. Thank you very much for listening, and we're looking forward to meeting you personally. Just go out there, invest strategically, invest intelligently, and become financially free.